Good morning, good afternoon, and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and co-CEO of Billie, Matthias Knecht. Great to have you with us.
Morning, Elliot. Thanks for having me.
Okay, so before we get cracking, we're going to learn a little bit more about Billie. Okay, now look, buy now, pay later, as we know, was all the rage in 2020, 2021, but mainly when aimed at consumers. If I'm right in understanding, Billie is basically doing the same for businesses, is that right?
That's right, Elliot. Billy is all about B2B payments, and one of the core products we are offering is exactly what you're saying, a buy now, pay later product, which is aimed at business customers. So that's one of the core products we're having. We've seen a lot of innovation coming from the B2C space, and we are now taking this over to the B2B space for business customers.
But how does this, differ from, there are a lot of SME fintech lenders out there. Our viewers will be familiar with iWalker and Market Finance, for example, among many others. So how is what you're doing any different from what these other SME lenders are doing, other than kind of dressing it up in a sexy BNPL dress?
That's a great question. And Elliot, I myself have worked in SME and business lending before. The first company we founded, me and my co-founders founded, was a peer-to-peer SME lending company back in the day. So I know quite well how these businesses are built and how the challenges are. And I think there are a number of differences, especially about the product, but then also how the product is delivered to customers. So when you see business lending, like the traditional forms of business lending, what you're usually looking at is installment loan products ranging from 6 months up to 5 years. If you're looking at the likes of iWalker, Funding Circle, my previous firm, and many of the others, you're seeing usually these kind of short-term to long-term loans that are used for working capital financing or for equipment financing. And I think these are more, let's say, the traditional loan products that now get delivered in a more automated, more fintechy fashion. I think buy now, pay later is a bit of a different game since it is less, from my perspective, less a loan product, but literally more facilitating an online transaction at the point of sale where this transaction happens. And the liquidity aspect that you're mentioning is one of them. Yes, we are financing the receivables of the buying companies for 30 days, 60 or 90 days. That's correct. But then again, I think the core of what we're doing is we're providing a payment method that is incredibly easy to use, very convenient for the buyer, that where liquidity is one aspect of it, but the whole user experience, how you can check out, how the invoice is delivered to you, how like instantly this checkout experience is and how frictionless it is. I think that is the core of the product where liquidity is just one part of it.
Okay. And late last year, you raised, I think, $100 million at a $640 million valuation with BNPL behemoth Klarna among your investors. What was the money for, and have you got any more fundraisings planned?
That's right. So we are very fortunate to really have attracted great investors to us. One of them is Klarna, and this also comes on the back of the partnership that we have signed with Klarna. So I think in terms of how we use the funds, there are a couple of ways that we'll use it, where we want to invest behind. One of them is clearly to invest into our product leadership, right? We are, I believe, one of the very few parties who are offering B2B buy now, pay later globally at the moment. And we are like the leading party here in Germany and then also in the wider Europe as soon as we'll expand. So getting the product up to a stage, what we can see in the B2C sector, I think this is the core of what we're investing behind in terms of new product features, new ways of integrating with shop systems, with payment service providers, with partners like Klarna, and then delivering an amazing product experience. I think this is where part of the funds are going. Another area we are investing behind is internationalization strategies. At the moment, Billy is a German-centric firm. That is where we have built the firm. It's the largest market here in Europe. But what we're seeing is that the buyer demand for a B2B buy now pay later product is ubiquitous across all the countries. You'll see it everywhere. All the business buyers across the European countries, the preferred payment method is invoice-based payments or buy now pay later payment method. And that's why we're saying, look, we will bring this payment method from Germany now to all these other countries. We'll open office there. We have distribution and also collections on the ground. We'll need to adapt the systems, the payment method, the refinancing. So I think this is where most of the funds also will be going next to the product development. We also have Klarna as one of our investors joining the last round, because this is something which is maybe a bit unusual to have like a strategic, very large behemoth like Klarna joining a funding round of fintech like us. I think this is part of us really putting the partnership that we have signed with Klarna on very solid footing. Um, what we've seen with Klarna is that Klarna is clearly the champion in the B2C area, having put out an amazing consumer product. At the same time, what Klarna has told us what's missing in their offering is, of course, like a B2B proposition. And that's why we partnered with Klarna to deliver the Billie payment method through the Klarna infrastructure to the Klarna merchants. And that's why we also said, look, we could also accept an investment of Klarna to put this in very solid footing.
Okay, so we've heard about Billie. Let's now get to know Matthias a little bit better. Okay, so Matthias, most entrepreneurs, they seem content with an MBA, but you actually, I think, have a PhD from Columbia Business School. Was a career in academia initially your plan?
I think that is, something which is probably unique to the German market, to German founders. That I'm coming from an engineering background, and I was also always very attracted to academia and to advancing my career there. That's why I also pursued the PhD route to look into academia a little bit more. I did this while being at McKinsey, so I tried out management consulting before, then doing my PhD more or less on the side in an educational leave at McKinsey. And that was for me, a very thrilling experience to balance on the one hand side the business life that I had with McKinsey plus the academia life here in Germany, then at Columbia in New York. So I think balancing both was just very exciting to me.
You mentioned McKinsey. At what point, when you were there, did you realize that you wanted to set up your own startup? I think in this case, ZenCap. And what were your biggest mistakes in doing so?
You know, being at McKinsey, I think looking back at this, I would probably say this provided me with a lot of the tools that I can now apply in my entrepreneur and startup life. At McKinsey, I think what I learned there was to, in a very structured way, like disaggregate problems, solve problems with highly analytical methods. I think that was an incredible experience working, especially for large and super large corporates. I usually was involved in projects with banks, insurance companies, private equity companies. So there, I think I really acquired some of the tools that now come in very handy leading the startups that I'm doing. Um, and then, at McKinsey or probably most professional services firms, you reach a point where you then should decide, look, do I want to become partner in the firm or do I want to do something else with my life? And at this point, um, for me, it was very important to say, look, I was now a consultant for a very long time, trying to coach and advise companies on what they should do. But I actually wanted to go onto the playing field and say, look, I want to do it myself. I want to be responsible myself to really execute, implement, and see companies growing, and not just being the one trying to advise what to do and then leaving the company after 8 weeks, right? And this was for me then the clear decision to step on the playing field. And with regards to your question, what we did wrong, what I personally did wrong. Look, there were so many things. Founding my first startup, coming out of management consultancy, I didn't know literally anything about startups. I didn't even know what a CTO really is, or what product management really does, or how to set up a finance organization or marketing organization, or let alone risk management, refinancing, fraud prevention, collection, whatever you need to run the companies we do. So there were a lot of learnings that we did over the first 12 to 24 months coming into business, starting from like a couple of people sitting around the table to like 130, 140 people organization that we then sold to Funding Circle in the UK.
Well, I'm glad you mentioned that because, as you say, you sold ZenCap to Funding Circle. Then I think you left Funding Circle less than a year after selling um, uh, uh, ZenCap and to found Billie. I've seen reports that your departure was not necessarily on the friendliest of terms. Do you actually, looking back, do you regret selling ZenCap? Maybe you could have turned ZenCap into Billie before Billie, if you see what I mean.
I don't think so, not at all. I think when we decided to partner with Funding Circle, also to sell our company to Funding Circle, there were a number of very like clear decisions my co-founder and me, together with our leadership team, have been taken. I think on the one hand side, it made a lot of strategic sense for Funding Circle and for us to team up. Right back in the days, Funding Circle was a very strong, like a company, or still is a very strong company in the UK and in the US, and we were serving the continental European markets. And Funding Circle, like coming from the UK to the United States, they also acquired a company there, so they grew inorganically into these markets. Same thing now with continental Europe. They also wanted to acquire the leading player there to then grow into these markets. So from a strategic point of view, it made total sense. I think from a team fit view, we also thought it made a lot of sense since teams were highly aligned, at least at that stage. Plus, also from a commercial point, it made a lot of sense. So I think back in the days, this decision was sound. I think what we then just recognized a few months into the transaction is that being acquired, you're of course not like the entrepreneur anymore that can take decisions by yourself, that is leading the company, that's providing the vision, the strategy. And I think this was one of the points where my leadership team and I then decided, look, it's probably time for us now to then start the next company where we again can be in the driver's seat and can really execute on our ideas.
Okay, so Matthias, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Billie co founder and co CEO Matthias Knecht. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Matthias, let's now talk about the future of finance. Now, many fintechs start off in one niche and then they kind of expand into others. What's to stop deeper pocketed, B2C buy now, pay later providers, for example, I know like Afterpay or Klarna, even one of your investors now, introducing copycat products aimed at SMEs? I guess perhaps with Klarna, as you mentioned, maybe they can kind of just white label your product and that's all fine. But certainly there are other very big fintechs out there that presumably it wouldn't take much of a push for them to do what you're doing and perhaps provide you with some stiff competition.
I think what we're seeing out there is, especially if you're looking at the buy now, pay later companies, the very big ones like Klarna, Affirm, Afterpay, and others, is a bit of a rebundling strategy that's going on. So these companies, especially with the example of Klarna, they started to be a payment method in the checkout for consumers, just like that, right? But after they've achieved enormous distribution, have been present now in so many tens or hundreds of thousands of checkout, I think what happened is that these companies recognize that they have so many touch points with individual consumers that they want to execute and also leverage these touch points. So what we've seen is a development that companies like Klarna have developed amazing consumer apps and are funneling consumers from the checkout into their own ecosystem, into their Klarna app in this way, in this sense. And here they are offering not just services that are tied to the transaction itself, like slicing and dicing the transaction or postponing the payment date or tracking the shipment even, but other services like offering a credit card, offering a full-fledged bank account, offering a trading product, or offering deposit products. So I think one of the trends you see unfolding out there is that companies like Klarna, who have like at the moment more than 100 million customers, they're rebundling services, becoming financial super apps, and actually trying to become your financial home as a consumer. So basically, from my perspective, becoming at some point severe competitors to, on the one hand side, neobanks like Revolut, N26, and others, but also traditional banks who are also providing some of the services you're seeing here. And with regards to your first question, Are we seeing other players out there who are also going into buy now, pay later space? Absolutely, yes. Especially in the consumer space, you're seeing this happening right now. Many companies who are offering credit cards, be it Revolut, be it Curve, or many others, are trying to add pay later like functionality to their credit cards, and I think that's a valuable, like valid thing to do. At the same time, if you think about who is one of the main buyers of a service, that's the online merchant, like the merchant where your payment method is sitting in the checkout. And as an online merchant, it's very important to be able to guarantee your customers a very unified and always the same checkout experience. Now, if you're having credit card companies starting to add pay later functionality to their credit card, that's great. But as a merchant, you cannot be sure that all of your customers are having credit cards where they can basically access these kind of functionalities. That's why I see many merchants saying it's great that we have this sometimes on credit cards, but let's put it into the checkout because I want to offer literally everybody this kind of checkout experience.
Okay. So look, I mean, in the consumer space, as you say, buy now, pay later is, growing and is now huge. I mean, but it hasn't quite gained the kind of notoriety that, say, Wonga did with its payday lending platform. But regulators have begun to take note, concerned that people are perhaps being encouraged to spend money they don't have. Do you think a clampdown is coming? I appreciate you're not in the consumer buy now, pay later space, but do you think, in general, in the industry, that some kind of regulatory clampdown is coming, even if it is just for the consumer space in buy now, pay later?
That's definitely something you are seeing already happening. You see the first players are really reacting to it. Klarna, Affirm, I think they've taken steps to try to make sure that they are not exposed to some of the things that we've seen in the early payday lending days, where payday became a fintech trend. So I think definitely yes, we need to be very aware of not trying to over leverage consumers that are just spending money that they don't have. So definitely that's a big thing in the industry where the large companies are trying to think about like what can they do to protect the customer. There on the consumer space, there are many things to do. For example, if you are a company like Klarna that has also access to the consumer's bank account, yeah, you can make assessments on the consumer's cash flow and maybe even get a good sense of the customer's credit worthiness, and then can try to assess what kind of limit should I grant this customer, and at what point do I need to stop providing buy now pay later services to this customer. So I think there are many also technological ways of trying to make sure that this doesn't happen. When you are then looking over to the B2B space, I think in my area there is less of this concerns because here you're dealing with corporates, you're dealing with companies that of course need to work like manage their working capital and who are usually a lot more professional in trying to steer the working capital to the treasury function.
Okay, Matthias, we've got 1 more minute for this section, so just to ask you one more question. Every SME focused fintech seems to talk about it being, that there's tough access to capital and it's still kind of an unmet need. And then we see fintechs like yours and others take market share. You think by now the banks would have gotten their act together to ensure that they're helping small and medium sized enterprises, SMEs, and that the banks would kind of be nurturing those relationships with companies that one day might become very big companies. Why have they not? Why have banks seemingly still not gotten their act together when it comes to the SME space, effectively leaving the playing field open to the likes of Billie?
Yeah. And here, I think my answer would be different from country region to region because in some regions you see quite a high penetration of banks, cooperative banks, communal banks, really being active in the SME segment, also to the near prime customers. Whereas in other countries, looking at the UK or other countries where you have a more consolidated banking landscape, here you really tend to have this kind of a financing gap for the lower and micro SMEs who really have difficulty gaining traction and gaining access to capital. So I think the first answer to this would be it's different from region to region. Countries like Germany, you have probably a higher liquidity for these companies, whereas in UK it's more concentrated. But important for me to mention is also that buy now, pay later services are, again, not just about liquidity, but literally about helping merchants to increase basket sizes, repurchase rates, and providing a customer experience that makes them come back and back and back. Liquidity is a very important point, but just one of the many pillars we offer.
Okay, so look, Matthias, it's now time for our rapid fire round of questions. So, as I said, if you can just give me one word answers, that would be great. And I'm actually going to time it right now so that we're only going to use the full 90 seconds. So, are you ready?
Let's go.
Okay, most successful fintechs we know are very well funded but are still losing money hand over fist. Is that something we should worry about, or is that to be expected?
Not at all. As long as customer traction is there and the customers are growing, I think that's totally valid.
What fintech segment besides yours has the biggest potential over the next 5 years?
I think everything in the B2B fintech space is amazing, especially if you're looking at accounting software integration with ERP systems. There's a lot to do.
Okay, what is the biggest pain point in your everyday financial life that you would like to see resolved?
It's hiring. Getting the best talent on board is incredibly challenging these days.
Are we at the beginning, middle, or end of the fintech wave?
Middle,
Do you have a metaverse strategy?
not yet.
Have EU and US regulations kept pace with all the developments and changes that we've seen in the financial industry?
EU is far behind.
How would you describe NFTs? A scam, an interesting concept, or part of our future that we really don't want to miss out on?
An interesting concept that is overhyped at the moment.
Have you ever invested in crypto?
I did, but just to try it out, I'm not a big investor.
Are physical points of sales part of the future of finance?
They are.
Okay, we haven't got time for many of these, but on a scale of 1 to 10, 1 the least likely, 10 the most likely, how likely are the following in the next 10 years that one of the neobanks will be as profitable as a top tier legacy bank?
10.
Okay. So look, Matthias, I'm afraid we are out of time. So I really just want to thank you, Billie, co-founder Matthias Knecht, for joining me today. Thank you so much.
It was great fun. Thanks a lot for having me, Elliott.
Okay, and we're going to be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye bye.